Good morning, everybody. This is Hemen Kapadia with a live show on ET markets. Basically, obviously, as you know, I'm a technical analyst, so been doing this for a long time, ages actually. So look at derivatives a bit, but basically hardcore technical guy, and then look at little bit of derivatives, little bit of fundamentals. Let's start with what the markets are and what the markets look like doing. We've been in a downfall, or let's say we've been in a corrective phase for the last 6 trading sessions. We've had a gap up opening today, which hasn't sustained. I think the single biggest villain in the piece is, I believe it's the dollar index. We've gone at multi-year highs and that refuses to stop. So a little bit of respite if it's supposed to come, or if it's expected in the markets, is if we see a sort of a cool off in the dollar index. Surprisingly enough, the VIX continues to go down. Frankly speaking, on a normal scenario, the VIX has an inverse relationship with the market. If the VIX is down, the market is up, and the VIX is up, the market is down. That's what it normally pans out. Well, the VIX, which was around 24, went to 22, went to 20, went to 19, 18, and as of today, we are sub 18. So I think that is a little bit of a confidence booster, and the VIX has been coming off slowly and gradually. Even over the days, over the last 5, 6 trading sessions, the markets have been down. Now, that is a dichotomy of sorts, but nevertheless, the market is always right. So 15,900, 15,500, 15,200 are three important supports from a slightly, what would you say, medium-term point of view. 15,200 held. We've tested that a few weeks back for 2 trading sessions, that held. Then we saw a bounce back to 15,900. We saw correction, came back to 15,500 and went to 16,200 plus couple of points. We had a major bearish gap a few weeks back, probably 4 weeks back. Now this gap was between 16,172 and 15,886. The market took almost a month to cover this gap. Well, it finally did. And we ran into resistance from the 55-day exponential moving average and the 16,257 level. So multiple resistances, and not to forget the fact that the Nifty was up almost 1,000 points from the bottom. We still seem to be in a recovery mode. I don't think it's a rally. The longer term picture is not sanguine. Most of the mechanical indicators on the long term charts still are wobbly and have given crossover sells and don't seem to be in a mood to reverse that in a hurry. Maybe the lead indicators could provide some respite, but the lag indicator like the MACD will probably remain in a sell for months on end. So any recovery, which cannot be ruled out, will have a hangover, a question mark about the sustainability. So 1,000 points, now we've seen a correction coming, and despite a falling VIX, we're down. So if we don't break 15,900 in the near term, I think that would be a small positive. We broke that intraday, but we didn't close below that. So assuming those levels hold from a closing point of view, chances are that we're going to see a bounce back. But we need to take out this 16,200 level for a further upside to come in. Two things need to happen. Reliance is at a very crucial situation. Reliance itself is an industry of sorts. So big weightage on the markets. We spent around 7 weeks and 10 trading sessions. It's been down for around 7 weeks, but we spent around 9 to 10 trading sessions over here. 2369 is an important support level. We've tested that a few times over these last 7-8 trading sessions. And if that breaks from a closing point of view, I think that would mean a breakdown from our distribution, and that could have a negative effect on the indices also. So if Reliance holds 2369 for the next few trading sessions, ideally 3, one would expect the market to stabilize. And the other fly in the ointment is the IT sector. I mean, during the last quarter, the Infosys results actually vitiated the entire information technology atmosphere, and saw we had a huge gap done in the entire sector sort of imploded. And this time around, just when there was some stability coming in and there were some positives, green shoots on the daily charts, which hopefully were on the verge of getting converted on the weekly. Well, everything has been washed out for the time being because TCS results, disappointing or no, that's not my subject, but they broke the low and we continued the series of lower tops and lower bottoms, which is obviously, and HCL Technologies has done the same. So despite a sharp decline over the last, 6 months or so, IT is in no mood to provide any respite. So if the markets have to stabilize, 2 points, one Reliance 2369 needs to hold, and somehow IT needs to reverse. There are no signs of that yet. But even if the IT negativity needs to get set off in terms of the indices, I guess Reliance needs to perform. We don't have a cement index, but cement is oversold, so that looks okay. In fact, the auto index has posted a fresh all-time high. So auto is notwithstanding a small cool off because they've had a run up. One can expect auto to also remain more positive than negative. Capital goods led by L&T has given a breakout of sorts. So has FMCG, even consumer durables. So consumer and pharma is oversold. Cement is oversold. So frankly speaking, not many of the sectors are in a mood to go the other way, except IT and Reliance as a sector. So these two things are negative. Banks also, they've come off a bit, but as of now, we've not reached a make or break level, and they also seem in a mood to stabilize. But levels need to get respected. We'll have to wait and see how these things pan out. 27th is the FOMC meeting in the US. Let's talk about 1%, 100 bips rate hike, inflation at 9%. So frankly speaking, that is going to have a major impact despite the sell-off. Somewhere the hikes are built in, but the commentary, if it's too hawkish, would once again take its toll on the market. So I guess till then we are going to remain slightly choppy. We have the monthly expiry coming in at 28th. It's a big month expiry. So 27th is the FOMC meeting and 28th is our expiry. So I guess around 28th is where we will see something decisive, something more decisive coming into the markets actually. So frankly speaking, not a very tradable markets unless you are writing calls and puts. Obviously, one needs to cover those and not have a naked position in that. But yes, script specific, some stocks are beginning to look a bit positive. You have relative strength coming in something like a Tata Consumer. Even the realty sector, whether you look at Godrej Properties or Oberoi Realty, they are looking positive, and at least in the short term. Once again, all this needs to get transformed to the weekly chart for something more sustainable to come in. But right now we are clutching at straws, and anything, even in the near term positives, would be sort of accepted with glee, so to speak. So even reality sector looks promising. So a more stock specific approach is sort of the order of the day. Markets remain iffy. They've been down for some time. Maybe there could be a bout of short covering if there are some positive surprises. Aren't any. Hopefully, somewhere out of the blue, the Russia-Ukraine conflict comes to a premature end. That would provide a major fillip. But I guess that's all hoping against hope. So as of now, it's better to be stock specific. Yes, and after a 1,000-point rise, the markets don't seem to be in a mood to sort of recoup some of the losses, and we've been down for 6 trading sessions. So, and crude has made an intermediate high, so that is some sort of a respite. Okay, we might see a small bounce coming in, but crude seems to have peaked from a medium-term point of view. So I guess this sort of gives you a snapshot of various sectors, our markets also. So any questions would be welcome from your side about anything, stocks, indices, whatever, technicals, obviously. we have a question on the FMCG sector. So we can look at the Nifty FMCG. Oh yes, we are in an intermediate uptrend. We had approximately a 8 to 9 week consolidation. This is on hindsight because it moved sideways for an X number of weeks. If there's a move on the upside, we term it consolidation later. And if there's a move on the downside, we term it as a distribution. But as of now, it was a consolidation and we've broken out and we have done well. 5 weeks up in a row. We're at 41,000 to 45. The all-time high for the Nifty FMCG index is around 42,000. So, I mean, we're almost at all-time highs while the markets are very far away. So, defensive or not, FMCG look at the sector as a whole looks quite interesting. And yes, one can pick stocks which haven't are performing that much and could have the propensity to catch up. So penny stocks, that is a dangerous question. Well, normally you have the mainline stocks moving, then you have the mid cap, then you have the small caps, and then you have the penny on the cats and dogs. So I think we still are extremely wobbly on the mainline. Some technical green shoots on the mid caps. So frankly, I think that moves later and probably in the last legs of the move. And currently, we still haven't sort of petered down even on the downside. So I think that's far away. One should stay away. And from a longer term point of view, honestly speaking, I've been doing this for a long time. So despite your best efforts, it's impossible to catch the tops and bottoms. The Nifty was at 7,500 on 23rd March 2020. I think very few people on the planet would have said that we're going to go to 18,500 in the next couple of years with panic all across the world about COVID-19. So impossible once again to catch a top or a bottom. So from a longer term point of view, yes, I think one can start nibbling. Our figures are not bad. The numbers are not bad. The GST collections are quite robust. Yeah, the rupee has depreciated against the dollar, but I mean, most of the world currencies have, and we've sort of been relatively less on that front. So yes, from a longer term point of view, if you want to start buying, let's say you have 100 rupees to allocate, I would say 25 to 30% is the amount or the capital one can deploy. And if you're saying which ones, I would say 50% mainline stocks, 50% blue chips, and then you divide the rest into small caps and mid caps. But yeah, and only fundamentally sound stocks. So from a longer term point of view, yes, one can start nibbling. And you're saying, should one wait for the FOMC minutes? Ideally, you should, but once again, if you're buying good stocks, if you like something and the Nifty PE was 32 or 30 plus, we're getting the Nifty PE is up 20 today. I mean, it makes it's plausible sense to sort of start at least acting in a small way. Yeah. So inputs regarding volatility index. Like I said, normally you have an inverse relationship as far as the volatility index is concerned, and markets. So the VIX is up, markets are down. Markets are down, VIX is up. At times, contrary things have been known to happen, but then, well, the markets are markets anyways. Is it a good time to buy IT stocks? Well, I'd say the same logic or the same view that I've given for the markets for the earlier question. If I go by pure charts, I think it's going to take time. If I want to see and expect technical positives on the IT sector or maybe Infosys, frankly speaking, that's not going to be visible for the next 4 to 6 months at least. So that isn't happening, I believe. But once again, so if you're a pure momentum player, stay away for the next few months. If you're not, and if you're a fundamental person, it makes sense to once again say you want to deploy 100 rupees. Time to deploy 25 at least on the bellwether stocks, whether it's Infosys and TCS, because whenever things turn, I think there would be a major savage turnaround. It could take its own sweet time. You have to be patient and the mindset that yes, there are no reversals yet in sight. We are buying something in anticipation because it's impossible to catch the top and bottom. And with the understanding that if the markets go down more, which after a bounce, I think they could, because nothing yet seems to suggest a major turnaround. So we want to put, and we should be comfortable putting more money in the same stock or the same sector at lower levels. It's like doing an SIP. So if you have nice fundamental stocks to invest, don't go the whole hog, spread it out like an SIP, and yeah, it makes sense. And from a 2-year point of view or more, I think lots of opportunities. And if it goes down further, I think we'll get to a level, and if the Nifty comes to around 17 or 16 price earning ratio, I think it will be a screaming buy then. But even now, one can start nibbling. There are a few stock calls also, which there are a few stock calls also which I have. Firstly, there's a buy call on ABB. ABB is in a short term, medium term, and yes, even a longer term uptrend. We are at a fresh all-time high, which is quite amazing, or a sign of resilience in a market like this. So one can look to buy ABB. This is more of a shorter term trading call at around 25.70, stop loss 25.40, target of 26.30. Secondly, a buy call on Astral Limited. Once again, this is a sort of a short-term trading strategy sort of a thing. One can buy Astral at around 1760. It's a conditional buy call with a stop loss of 1745 and a target of 1790. Few trading session call Astral and ABB. In steel, that is a deadly question which I would not want to answer. But yeah, well, China is a major consumption of it drives the metals markets. But yeah, slowdown there would impact everything. Coming back to stocks, if you look at Steel Authority of India is down for 40 months in a row and counting. Tata Steel is different, but same story. So commodity stocks, slightly difficult to take a call, but if I were to sort of break it up further, Steel Authority is available at 16.5 right now. I think there's an 7.5% dividend yield, and but it has a book value of around 131, and the PE ratio is around 2. So frankly speaking, not much to lose over here. As far as technicals are concerned, like I said, 14 months in a row, no signs of a reversal yet. Very strong support at 65 and 55. So once again, you can nibble just a bit, whether it's Tata Steel or Tata Steel preference. It give a big dividend, 51 rupees. And I believe that in a day or two, or probably today, the last day where I think it's going to be split into 1 rupee stock. So I think there's a last day where it is putting X split. So yes, so once again, diversify your portfolio, add maybe a little bit of metals, a little bit of IT. So if you're going to add metals, Tata Steel can be considered, DLT, DLF can be considered, and once again, put 20 to 25% with the assumptions that you are buying at interesting valuations, which could get more attractive on a deeper level. Is Titan a good buy? Time being, yes. We had a 2200 to 2675 range. We saw a downward breakout from there, and now we've recovered sharply and we've recovered well. Surprising amount of strength. So, I mean, if it has recovered so well, I assume that the undercurrent is solid. Titan is in a 21-year bull market and which still hasn't exhausted itself and is still up and running. So 21-year bull market and still counting. So yeah, Titan on declines. We've made a move from 1820 to 2175 in a matter of a couple of weeks. So I would like the stock ideally to retrace a little bit of this sharp rise. That's a big gap also, and then look to buy. Okay, US dollar rupee. Well, we're at all-time highs as far as the rupee dollar equation is concerned. There aren't any known resistance levels if that is the case, and I believe psychologically we've gone to 80, and 81 is a possible target from where we should experience resistance and sort of start stagnating a bit. So 81 is the level I would look for as far as the rupee dollar equation is concerned. Balrampur Chini, good buy for the short term. Yes, short term it's a good buy. But once again, it's a short term question, so it's a short term answer. Please keep a fixed stop loss. We're at 361. If you have an intraday view, need to keep a stop loss at 355. If you have a positional call, you need to keep a stop loss at 345. And you have a slightly deeper stop loss, then it's 330. But yes, coming back to your question, it's a good buy for the short term. Closing about 365.50 on the daily chart should take it to 378 and 385. So stop loss is in place. Yeah, I think Balrampur Chini looks set for a bounce from here. Yes. What sector am I bullish on? Well, from a near-term point of view, I would say FMCG, obvious auto, and even a pharma. From a slightly longer-term point of view, I think not very many sectors are looking exactly sanguine from a longer-term point of view. But yeah, from a near-term point of view, these are the sectors which I would be positive upon, and even some of the banks would make sense. Thoughts on ITC? Well, ITC has been a perennial underperformer, but that's in the past tense now. We had a major period of underperformance from, let's say, around 2016 to 2020. Well, ITC has finally shrugged off the cobweb, so to speak, and we are in a short, medium, and long-term uptrend. So, frankly speaking, ITC should be moving to 320 and 350. So, on decline, ITC the buy, and this is after a long time. So, ITC looks good from an investment point of view on virtually every decline, frankly speaking. You have BSE Limited, BSE stocks. So I assume you're talking about Bombay Stock Exchange. No, I think one can hold. We saw very sharp correction from 1040 to 550. This is obviously adjusted for the bonus. Downside appears limited. We seem to be stabilizing. So I would suggest hold if you have a longer term point of view. Things don't seem to be bad. It's a good time to invest in construction and real estate. Yeah, now real estate, I would see something like a DLF. I'm sorry, I don't track KBC Global, but if I look at the charts, it doesn't give me any confidence, nor would I want to track the stock. It's gone down one way and it moves in circuits. So no comment or avoid on KBC Global. Something like a DLF or even a Godrej property would make immense sense. JSW Steel, if you have a slightly near-term view, there is a mini breakout of a 590. Longer term point of view, frankly speaking, it has shown a lot of strength. The stock has gone from 780 to 520, while many other stocks have declined even more sharply. A lot of relative strength, but same logic applies. It looks like it's going to take time for this correction to play itself out. So I would wait a bit and maybe better levels. Near term, yes, I think I would be slightly positive. Anyone can go for Zomato. I am a regular customer of Zomato. I think they give good deals along with Swiggy. So I've always maintained I would prefer to order on Zomato than to buy on Zomato. I don't think we've ever seen profits yet. I don't know when profits are going to come on the balance sheet. So I'm slightly conservative. I would. There were some positives, but I think after the Blinkit deal, in fact, things were looking slightly positive even on the weekly charts. But after Blinkit deal, everything has got washed out, and we continue the series of lower top, lower bottoms. Though we haven't posted a new low, despite an oversold situation, the charts won't inspire too much confidence. So unless you're a high risk guy with a strict stop loss at 50, but once again, I don't see any compelling reasons to buy Zomato. No. Paytm, yes, Paytm seems to be clawing itself out of obscurity. The daily picture has definitely improved. Okay, once again, little bit of a caveat. Some of these new listings don't have too much of data, so give a longer term call is technically is obviously not feasible, doesn't make sense. But with whatever limited data we have, I think Paytm, the weekly, so the weekly charts have improved. Uh, Things are looking positive. We posted a higher top, higher bottom, and the mechanical indicators are supporting the move. So one can take a view that Paytm is in a mode to improve, and probably it has posted a weekly bottom. I would have more conviction if I had more data. But with limited data, I can still say the weekly picture is in a mode to. We seem to have posted a weekly bottom. Yeah. Well, sort of we spoke about Tata Steel, but I'll just revisit that. Uh, Most of the steel stocks, metals dependent on China. International copper still has bottomed out, long-term support at 750 as far as uh, Tata Steel is concerned. So I would wait a bit. Okay, short term. Okay, so I would be slightly more positive on declines and not at one go. The market itself doesn't inspire too much of confidence to go the whole hog and sort of spread it out. This year is going to be bumpy, especially after the last couple of years. So if you're a new investor or trader and you've been used to seeing the markets move from March 2020 to November 2021, I think that's a thing of the past. 2022 is going to be a year where making money is going to be difficult. 7-8% move is going to be a great achievement. So one needs to be slightly cautious and tiptoe around stocks. Would like to see your screen on technicals if possible. Let me see. Okay. One sec, I'll just try to get this. I know I'm having a little bit of difficulty sharing the screen somehow. So it's just not happening yet. Okay, yeah. Okay. This is the Nifty daily chart. And let's break this up by looking at a 30-minute chart. We saw gap up opening today. Some of the mechanical indicators, if you see, are beginning to turn. Ideally, we need to look at 60 minutes an hourly chart. Now, the MACD is tantalizingly close to a buy. It's not yet in buy mode, but I believe if the markets don't go down very sharply in the next 1 hour or so, uh, it would convert into a buy. So if that is the case and we don't break yesterday's low for the whole day, chances are that this 4-5 trading session decline might just be coming to an end and we might be seeing a recovery coming in. So there are just the first signs, but we need this thing to pan out on the hourly chart. And if you look at the daily chart, yes, we've been down for the fifth trade. 1, 2, 3, 4, 5. This is the sixth trading session in a row. I believe that if we close above 16,000 today, which is a possibility, I think this sixth trading session decline would be mood to reverse itself. So yes, so it looks a bit promising, but we'd have to pan out. Yesterday also things weren't that bad, and then we saw sell-off coming in after 1 o'clock. So one would need to wait for these things to pan out before taking a call. But yes, it is trying to turn. We'll have to wait and see whether it turns or not. Yeah, I hope. Yeah, okay. Tata Motors, long-term point of view, it's a no-brainer. I think it's very clearly looking positive. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 months of a decline on a time price retracement from 530 to 360, 65. Short-term view, things are turning positive. I would say a close above the 440, 445 range should see it go up further. Medium term also, Tata Motors seems set to appreciate. The long-term picture, I would say we've had a phenomenal run. If the stock moves from 65 to 520, 530 over a couple of years, I think it needs to go on for a deeper time price retracement. We have, it's not that we haven't, but I don't think this is enough yet. So I would believe that short to medium term, Tata Motors is looking good and we should be seeing further upside. Okay, Indigo Paint. Okay, I don't track Indigo Paints in the sense I'm not getting the stock on my screen. Indigo Paints. Okay, I believe this is Indigo Paints. Yeah, this is around 1408. Yep. So since listing, we've seen a series of progressively lower tops and bottoms. 1350 is important support. Need to close above 1500 in the near term for an upside to come in. Major resistance comes in at 1750. Stability coming in into short to medium term charts, but two things. 1350 needs to hold. If that breaks and the stock closes below that, that means the downtrend continues. Extreme near term, a close above 1500 would be the first technical green shoot, and then a major roadblock at 1750. So we are trying to stabilize after after a major decline. Let's see whether these levels hold or no. What about ITC? I think we spoke about ITC. Long term outlook positive, looks good. NOSIL, what is the long term target for NOSIL? We are at 280. Long term, I am assuming your long term would be something like my long term, 2 years or so. I say 350 and 400, and maybe even more. Long term target for NOSIL. HDFC Bank, good time to buy. Why not? If you're buying 100, buy 30. There's not much to lose over here. But yeah, just play it safe because market sentiment, everything has taken a big hit. Views on Ramco cement, I'd say positive, near to medium term. Long term also, I wouldn't be too bearish. But yeah, as of now, the view is more of a medium term view, not even a short term view. We've spoken about Titan and Marico. We've spoken about Titan, Marico. We haven't. Sideways consolidation for what? 5-6 months. Ranges between 460 and 550. I'm positive on FMCG, so I would be slightly positive on Marico also. We've spoken about IT. We've spoken at length and in detail. Worst is not yet over. Time to start nibbling. About India, breakout at 18,500, heading towards 20,000, intermediate uptrend, rounding bottom, looking good, further upside, seems to be on the cards. Spoke about Titan, a lot of relative strength, looking decent. After a small cool off, if it comes in, looks nice. Tata Power long term looks great, but medium term also looks promising, but we are due for a big correction. It's finished a 13-year bear market, gave a fantastic bull run, and now it's corrected, but the correction isn't completely over. RIL, thank you, Vinod Gugale. Appreciate it. Reliance, we've covered it once again, 2369 crucial. That holds. That's fine. There's a near-term view. A medium-term view, we seem to be getting slightly top-heavy. So I would be slightly cautious. Levels haven't broken, but I would be slightly cautious. Apollo Hospitals on the short term. I would buy that on a closing above 4,000, not at current levels. Biocon perennially underperforms. Short term turning positive, medium term needs to close above 345, looks promising, hope it delivers. Hero Moto, yes, longer term point of view makes sense, like Bajaj Auto more, but yeah, Hero Moto worse in the sense the correction seems to be over on the long term charts. We are in a mood to improve from here. ITC long term target 350, 400. Okay, folks, I guess that's about it. Time to wind up. Okay, last question. Bharti Airtel. Short term oversold. Picture seems to have taken a toss. It's recently posted a fresh 1-year low, supported around 610. Need to close about 682 for things to improve. Doesn't look bad, but would wait and see if the levels hold or not. Okay, last question. Mathukon projects. No comment, don't track. Only thing that is oversold. Thank you. Hope you had a nice session. I hope you enjoyed it and it was worth the time. TVS, I assume it's TVS Motors. Short, medium, long term uptrend, all time high. Looks fine. Short term overbought. Thank you so much, guys. Vignesh, Mohammad Zaid Sheikh. Thank you. Hope you enjoyed it and was worth your time. Looking forward to seeing you guys again. Thank you.